presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compact Market Wrap YouTube update for November 24th, 2025, Thanksgiving week. Thank you for joining me today. First of all, I want to remind all of you to click on the subscribe button so whenever I post an update, you'll be notified and you can watch it at your convenience. Also, if you want a more detailed view of what we're thinking, what we're doing, and why we're doing it, go to compact.com and click on Insights. You can listen to the podcast and get the entire a much more detailed view of what we're thinking. Javed and I do that on a weekly basis. So all of that information is there. It is free. Well, when you click on the subscribe button, you can get the free update. And whenever I do an update, you will be notified. And then you can watch it at your convenience. Looking at the markets last week, not a good week in the markets. We were down 1.91% on the S&P. The Dow was down 1.85%. We looked at the NASDAQ down, and then the emerging markets were down 3.71%. So not a good week overall in the markets, a correction, a pullback, whatever you want to call it. And now we're at that critical point. But I believe, as I said last week, that somewhere between 6,500 and 6,600, we should make a bottom in this market. And that's what I was looking for support. We got there last week. I believe the low was 65,621 was the low on Thursday. And then on Thursday, we opened higher with all of the NVIDIA earnings, but the market opened higher, reversed down on the day. Not a good sign when you get good news in a market and it does not go up. But then it stabilized, and I think a lot will depend on what the Fed does in the first week of December. What do they do with interest rates? If we do get an interest rate cut, that will be supportive for the market. But if we don't get one, I think we could be in for more chop in this market. But I think we have made a short-term bottom. We are projecting a new high for the market. What is the Fibonacci projection? I will show that to you in a minute. Looking at communication services was the best sector last week. We saw it up 3%. And communication services, basically it's Meta and Google, are the two largest components of that sector. We saw that go up quite a bit. And Google came up with Gemini 3, which is the new AI part of Google. And the question is, will that be the next Chat GPT? Will they take away a lot of the search? I think it will be, and I think it is something to watch. And Google has been a big beneficiary of that, and I think it could continue to do that. Technology, on the other hand, was the worst sector last week, down 4.7%. When we look at it overall now, communication services is leading. It is the best sector, and then it's technology. It was the other way around, but now they have flipped places. So we'll have to wait and see if we can get some more follow through. But in my opinion, the way I'm looking at the market, and we will see how much Google can take away from ChatGPT, but it's something to watch and something we'll see. Oil continues to drift lower on the proposal of by the president on ending the Ukraine war. I think that is a long way to go before we can get all the different parties in place and the Russians and the Ukrainians can come. But there's some positive news there, and that puts some downward pressure on the oil market. Looking at interest rates, they were lower from 4.14 to 4.06. That's interest rates coming down a little bit is helpful for the market, but as long as we don't break below 3.8, that would suggest that the Fed is going to come in and really bring interest rates down to support the economy, or the economy is slowing. I believe that the economy is slowing in certain parts, especially the employment number, as we have seen. You can see the jobless, hard to get, minus jobs plentiful. That number is going up. You can look at the unemployment rate. That is starting to go up. And you can see the continuing claims. They've been relatively stable, but they're also headed in the upward direction. We got the September numbers, and they showed that 119,000 jobs were created in September. That was the delayed report we got for September. We got it a month late because of the government shutdown, but we'll have to see what October and November number looks like. November will not come out until after the Fed meeting. So the Fed will have to make a guess on do they want to cut interest rates without the job numbers coming down, without all of this data. And they will, I believe that they should preemptively cut interest rates. That is my feeling at this point, because interest rates right now, the way the economy is looking, they are still on a restrictive path. It's not a neutral interest rate that we have right now. It is still holding the economy back. Where is neutral? We'll have to wait and see. I know the inflation numbers everybody was talking about, they're a little bit higher than we had expected, but I believe that inflation, as I've said all along, everybody said because of tariffs we're going to see inflation take off. And I said, yes, we could see some little bump, but then from there we're going to come back down, and that's exactly what we've seen. Inflation has dropped back down. I know it's still hovering around 3%, higher than the 2% gauge that where the Fed wants the interest rates to be, but I feel that the Fed will move the goalpost. They'll cut interest rates, even inflation higher than the 2%, and that's what they have been doing. Looking at the numbers this week, we do get core PPI on which is the one the Fed looks at. Tomorrow morning we'll get that, the core PPI and the PPI numbers. That's what we are going to get. So we'll see how that impacts the market quite a bit. Looking at the technicals, we came down. This was the third wave. As I said, we are going to get a fourth wave pullback, which I think we got. I was looking for a low between 6,500 and 6,600. Well, we got there on Thursday. Thursday we had a key reversal where we went above Wednesday's high, closed below Wednesday's low. But then on Friday we went below Thursday's low and closed positive. That was a good sign and showed me that we could be headed higher. The critical numbers to watch are 67.13, which is the 50-day moving average, and the 67.09. Today we went and tested those. The high today was 67.15, and we closed at 67.05. So we still need a little bit more on the upside, but the projection I'm getting from this high that we made for the fifth wave top in the market on the dailies is coming between 7,100 and 7,150, which is about 500 points higher than where we are today. And that is another 3, 4, 5% higher than where we are today. We'll have to wait and see if we get that in February, that'll be, or January. We'll have to watch January very closely, as they say. As the first week of January goes, that's the way January goes. That's the way the month goes. And the way January goes, that's how the year goes. So we'll have to watch and see how much upside we get here in November and December. And then do we just top out, make a fifth wave top right here in January, and then roll over? We'll have to wait and see. So that is the target now on the upside. We have to get above the 6,700, 6,715 area, and we'll see if we can get that number tomorrow, this week. This week, the markets, as you know, will be closed for Thanksgiving. There'll only be very, very little activity on Friday and half day, so every markets will really be closed after Thursday. And then we get into the holiday mode, and then we get the Santa Claus rally, as it's called. So we'll have to wait and see if we can get above these 50-day and 20-day moving averages. Same thing happened last week. We got down here to the 20-week moving average. As you can see, we came and kissed it, and then we took off to the upside. But we're already showing a fifth wave high right here on the weekly chart. Each one of these lines, the green and red lines that you see, are 1 week of trading. But we could see an extension of this, and we could go higher here and make another fifth wave top up here. So we'll have to wait and see if that happens or not. Same thing is happening on the NASDAQ. 22,892 is the 50-day moving average. 878 is the 20-day moving average. Today's high was 22,879. You can see how the markets come to the technical resistance, and they stop there today. We closed lower. We need to get above the 2300, 23,000 area, really, or 22,900 to break out to the upside. So we'll have to wait and see if we can get that follow through this week to the upside. Weekly technicals again came to the 20-week moving average, tested that right here, and now we're looking for a new high in this market also. 10 years come back down. As I've said, as long as we stay right around here, 4.6 to about 3.8, as long as we stay in this range, right along here, we are okay. And that's what we've seen, back and forth, back and forth. As long as we are there, I think the market interest rates are going to be okay. Gold seems like it's concluded its fourth wave pullback. Now we could get the fifth wave rally to the upside. We got below the 20-day moving average. As I said, somewhere around the 50-day, around 3.367 on the GLD. This is the GLD. This is the ETF for gold. That's the symbol for the gold market. And I think we could be headed higher in gold also. Also, we've seen some come back up on the high yield bond. But again, we need to get to above 80.7. We are 80.57 today. That's where we are. We need, again, we're right up against resistance. If we can get some follow through this week in the high yield bonds, in the S&P, in the NASDAQ, that could be all positive for the market. That's the way I'm looking at these markets. Again, don't forget to click on the subscribe button. That's the way I'm looking at everything this week. I hope all of you have a wonderful, wonderful Thanksgiving. I look to be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.